Good afternoon and welcome to Markets Today. We are talking about the stock exchange, what is happening there, what happened overnight, what are the foreigners doing, what are the local investors doing, what should you be doing if you're considering going long on the Nairobi Securities Exchange. We'll also be giving you an update with regards to corporate actions. We have news scheduled out on Athi River Mining as well as on housing finance with regards to their bond, and also the NSC. It does have a new platform. What does this new platform mean for investors? Do we expect a better turnaround time? And do we actually expect any more products? Over and above this, we are having a continuation of the discussion with regards to debt. Kenya's debt ceiling has been reviewed from a percentage point of 50% of GDP to now an absolute figure, 9 trillion Kenya shillings. The question is, will it take us 3 years to get to this level, or will it take us a year or even 18 months to get to this level? And if so, what should the impact be on listed entities, if nothing else? What's the impact of debt on different asset classes? Today we're zeroing in on equities to see what's the upside or potential downside for stocks that are listed on the Nairobi Securities Exchange, and more importantly, what actions should you be taking if you are a long-term investor. Coming back to the corporate news that we have for you today, the NSSF, which is the National Pension Fund, has actually come out with the financials for the last calendar year with regards to its allocations to equities. Today, NSSF has 25% of its assets assets under management invested in Safaricom. This is a positive, but it's also causing an era of systemic risk. If anything happens to Safaricom, then you could actually see a dwindle with regards to the pension outlays that come from the NSSF. The question is, should a national pension provider be investing a huge chunk of its assets into one particular risk and not diversifying into other stocks? Over the last financial year, over and above 25% allocation to Safaricom, we've also seen increased allocation to some of the banks, largely being Equity Bank, KCB, Barclays Bank, and a bit of Cooperative Bank. So the question here is there any systemic risk? And certainly there is, and there needs to be an element of diversification. But as we always say, on the Nairobi Securities Exchange, you really only have 5 counters that you can invest in, largely because of liquidity and the attraction with regards to the dividend yields or the potential of capital appreciation. This tend to be Safaricom, KCB, Equity, Cooperative Bank, EABL, and sometimes BAT. It could be that NSSF is following this investment trajectory and not wanting to lose out with regards to the pension funds for the future. Secondly, we are looking at Athi River Mining, that is ARM. So today, the news has actually come out saying that the initial acquisition of its Kenyan assets has actually gone through as at today. Now, National Cement Company had acquired all the assets of Kenya as a going concern for Athi River Mining, and it acquired all these assets for 5 billion shillings. Recall that the CEO and the Paulrada family had earlier come out with an alter bid at 6.5 billion, trying to say that they also wanted to acquire the same assets, but then they came in at a later date and they were not able to actually go through with this transaction. They have been in court since May countering this conversion of ARM's cement assets to National Cement, saying that they had actually put in a bid and they want that opportunity to be able to come in and also bid for these assets. Now, the managers who are actually overseeing this particular transaction, being PwC, they have said that a transaction will go ahead. The National Cement Company has actually accepted to pay 5 billion of the 19 billion shillings that is owed to the local investors. Now, the consideration here on a counter, ARM Cement, a counter that had even touched a high of 103 in its good days, and this is in the year 2015. And by the time it was suspended in August of 2018, it was trading at about 5.5 shillings. And now it has actually literally given up its assets in Nairobi, or rather in Kenya, for 5 billion shillings. This is a company that had gone up to 400 billion with regards to its net worth. What has happened? This was really an element of debt and allocating debt to capital projects that were not able to prosper as fast. Now, this is at a corporate level, so it's really a household level. But the question is there an element of good or bad debt? And can bad debt actually quash the investment cycle or the investment returns of any opportunity? In other words, could debt be bad or detrimental to Kenya at a national level, in the same way that we have seen some of these companies actually go under because of taking on bad debt, allocating it to capital projects, and not being able to actually return a yield? That is something we will continue considering after the break. Now, on to the final news of the day. The Nairobi Securities Exchange did yesterday launch a new operational system. Now, this system is actually pegged to what is actually the system that the London Stock Exchange uses to trade. We expect faster trade, faster clearance of these transactions. Earlier in the year, NSE had actually come out and said that they could actually be able to reduce the cycle of settlement of trading securities from T+3, which is 3 days, to T+1, to 1 day. We understand that this system is actually now on board and it's actually working. We will be waiting to see whether the Nairobi Securities Exchange comes about into the public realm and tells us what to expect from this particular system. That's suddenly a huge capital expenditure that has gone through the books. Hopefully the results of this will be fruitful to the economy and mostly to the investors. For your consideration, other stock exchanges such as the Egypt Stock Exchange already have a very upgraded systems with regards to their operational setup. They are, however, charging very, very low rates with regards to access to the stock exchange in that particular country. The question is, with this new operational system, can the NSE make it more affordable for you, either as a retailer or as an institutional investor, to be able to access this particular market and trade? In other words, can this system allow for lower rates to be able to spur investor activity in a company, or rather on a platform that has seen almost a 50% reduction with regards to the turnover that has gone through the market this year compared to last year? For your reference, we do see retailers paying up to 2.5% per trade, whether you're coming in or going out. And we tend to see institutional investors paying anything between 0.7% to 1%. For reference purposes, in Egypt, they pay 0.01% for every trade that goes through. It's a very low rate, but for them, their focus is to spur investment engagement on the stock exchange as well as on their bond markets. The question is, can NSE be able to replicate this and find a way to use its new platform to be able to spur investment activity on the Nairobi Securities Exchange? We will take a short break to give you an update with regards to the daily commodity prices. We are also running live on our Twitter page as well as our Facebook page and our YouTube page, and that is Metropole TV. After the break, we will be discussing the consequences of a debt, at least with regards to the Nairobi Security Exchange equity opportunities. As long as the national debt is ballooning and it's actually getting bigger by the day, do we expect to see any allocation either by the foreigners or investors to the equities markets, or will all this allocation actually be taken to the fixed income market? And in other words, will investors prefer to give the government of Kenya the bulk of the money that they're able to raise, thereby creating a continued bearish stance with regards to the Nairobi Securities Exchange? Is it a good time to buy? Is it not a good time to buy? Are the fundamentals justifying what needs to happen on the NSE, or will the macros actually be negative for the NSE? And before we take a break, also remember that the oil prices have actually come off at least by 4 shillings for super petroleum. That's certainly a huge improvement, especially in light of the fact that we had seen a bit of geopolitical risk in Saudi Arabia when one of their oil fields was banned. That's certainly a positive for inflation, which is already at an all-time low. We will be conversing this as well as the element of a debt and the impact on equities on the NSE. We take a short break on daily commodities, and thereafter we will be joined by Mr. Abraham Kamau. He is the CEO of Miradi Capital. Don't go anywhere.